Produced by PI Media. Blockchain.
On the American frontier, you had only yourself and your God to answer to. The long arm of the law didn't reach into Oklahoma, New Mexico, or Oregon. In the absence of any major authority, the exercising of the law fell by default into the hands of the strong. Sheriffs, cowboys, or simply whoever had the biggest gun and the fastest hand in a given place at a given time. It was frontier justice, and if you weren't making the rules, you were following them. Bandits took advantage of the innocent and the unprotected. Doctors, quote-unquote, rode into town selling miracle medicines that amounted to little more than cocaine and water. Beefs between two drunks at a tavern were settled outside at the end of a pistol barrel. This spring, Satis Group LLC, an initial coin offering advisory company, published a study that tracked ICOs expected to go into active trading with a minimum market cap of $50 million. The researchers found that a whole 80% of ICOs out on the market were pure scams. 80%. Imagine that ratio of fraudulence in any other market. Imagine if your local grocery store sold 80% plastic food. Imagine if 80% of the S&P 500 companies were Ponzi schemes. Even if you don't totally believe those test results, there's no denying that crypto today is somewhere in between a market and a minefield. Really, it's a Wild West. A wide open landscape of bar fights, charlatans selling fake medicine, and then a few Clint Eastwood cowboys riding along through the noise. The American West and today's blockchain market share one key feature: a lack of regulation. When Mark Zuckerberg spoke to Congress earlier this year, it demonstrated to onlookers how far government officials are from understanding modern tech. If Congress can't comprehend how Facebook works, they can't reasonably impose laws on how it should work. And it seems pretty certain at this point that if Congress can't comprehend how a mainstream technology like Facebook works, they're a long ways away from grasping blockchain. We can only assume that in the near future, blockchain will remain something like the American frontier prior to train travel. New and largely unexplored. Quite spacious, without any good way for central government to impose laws over the whole area of it. This leaves us with a few central matters that will have to play out in the coming years. How long will it take for regulators to enter the blockchain market? What will blockchain look like once they do? And, perhaps most controversial, is regulation going to be a good thing? What would be the ideal scenario here? Unfortunately, there's far more meat to these questions than can properly be addressed in under 20 minutes. In order to get as close as possible to some answers, I spoke with a few of today's industry leaders, individuals who will likely play their own roles in shaping the future that we can only speculate about now.
Hi, I'm Fred Wilson. I am a partner at Union Square Ventures and an investor in a number of crypto projects and companies.
My name is Ren Hammer. I'm General Counsel for Orbs.
Hi, my name is Raphael Ouzan. I am an entrepreneur in residence at Thrive Capital, focused on crypto and blockchain technologies, and building my new company in the space as we speak.
It came a long way during the last year with respect to regulation on cryptocurrencies. We've seen some legislation in specific jurisdictions. but not any of the main jurisdiction. You haven't seen any legislation in the US. You haven't seen any legislation here in Israel. Some specific jurisdictions, such as Switzerland, Gibraltar, do try to take a more active role.
The U.S. government and the Chinese government, we already are seeing, and I think we'll continue to see these governments trying to put, some rules around what can be done and what can't be done.
Blockchain is quite a unique marketplace in 2018. After all, how many times in your life will you be able to witness the real-time versioning of an entirely new marketplace? Over the next few decades, the blockchain market will transform massively, and along the way, governments are going to be stepping in to make sure all that doesn't fall apart. Like any other market, the goal here will be to promote stability and prosperity, block monopolies from forming, and generally maintain law and order. Of course, people are going to disagree in a big way about how to achieve those ends. Libertarians and left-wingers, anarchists and communists will argue over exactly how and to what extent regulatory bodies should play a role in shaping the blockchain space. As your loyal podcast host, I intend to stay kosher on this matter, but I did ask some industry participants themselves, is regulation of blockchain a good thing? And, most importantly, for whom?
I think that to date, people have been able to do a lot of things that would have otherwise not been allowed. When you have all this white space and regulators don't understand it, that gives entrepreneurs a lot of running room to go out and do things. And that's been the case, and I think it will still continue to be the case.
Regulation might be an annoying word to some, but its benefits are equally tangible. One of the challenges of companies entering the blockchain space today is that there really is no rulebook. Some thrive on the chaos. Cowboys and robbers get to play by their own rules, handle anyone who might get in their way, and bask in the freedom of life without a policing force. On the flip side, safer and more law-abiding entities, the farmers, the conductors, the townspeople, would probably be better off with less calamity and more protection. More to the point, consider what happens when, theoretically, something goes wrong in a decentralized system. In a previous episode of the Orbs podcast, I explained the issue of service-level agreement on blockchain, how difficult it is to have any sort of service quality standard when there's no singular party who holds responsibility for the performance of the system. The same applies in a legal setting. What happens when, say, a hacker manages to steal huge amounts of crypto from unsuspecting investors, or a blockchain platform goes down and renders all the apps running on top of it totally null? When investigators show up to the scene, who do they hold responsible?
Basically, we are used to a system where when something doesn't work, you can rely almost that there's always a catch-all from the authorities. Could be the police, the judicial system, and so forth. The FBI, for example, going into Apple and asking to crack open a phone that they caught, or asking for data from servers like was done with WhatsApp multiple times, or Telegram and so forth. You have somewhere to go. In the case of a decentralized application, it's much more difficult, and it's to be considered on a case-by-case basis, which encourages the protocol itself and its holders and its token holders to figure out ways to self-regulate, to figure out ways to control the system in a way that it preserves it.
These are the sorts of matters that deeply affect whether mainstream businesses and consumers can trust decentralized infrastructures for their economic needs. We sleep safely at home knowing that the government ensures our homes don't have asbestos and our kids don't play with deadly toys. Blockchains are designed towards safety and security, but no system is perfect, and entities with low risk tolerance will be hesitant to buy into a game without rules. But accountability and fraud protection are just a couple of the legal quandaries that the blockchain market will have to grapple with in the coming decades. We're already beginning to see the seeds of relevant laws and regulations taking shape in certain countries around the world. And it's leading to new considerations for companies entering the space.
There'll be other parts of the world which will try to seize the opportunity and say, hey, entrepreneur, doing business in the US and China is tough. Why don't you come to Singapore? Or why don't you come to Switzerland? Or why don't you come, to some other place and build your business here? And I think that's going to be good for entrepreneurs in two ways. One, they can go there, right, and get all the benefits of that regulatory environment. The other thing is that's regulatory competition that in theory should try to keep regulators in some of the more developed countries at bay. And if you don't want to lose all of your innovation economy to places like Singapore and Switzerland, you're going to have to be balanced in terms of how you set the rules.
It's true that a few hubs in the world, a few countries in the world have positioned themselves early on as crypto friendly above all. So we have Zug in Switzerland, we have Gibraltar, we've got Singapore, maybe Estonia, and a few others that have attracted, thanks to friendlier regulations, a lot of investment dollars, a lot of crypto investments as well, and talent working on basically building their companies from there. But this is shifting very quickly.
In these matters, too, is blockchain not so different from any other market. Nations are in constant competition over international business and use corporate tax rates and reduced regulations as incentive. You might say that the future of blockchain development, where talent ends up accruing and where businesses choose to set up shop, may have just as much to do with national regulatory standards as with, say, national education systems. In the meantime, we'll be watching for when national regulatory bodies begin to recognize blockchain as a market worthy of its own dedicated legal treatment. It's understandable why this hasn't happened yet. Legal bodies move much more slowly than the tech industry does. Especially in blockchain, an industry that seems to operate according to dog years. The distance between these two factions is wide. I asked our resident experts about how much longer we might expect the blockchain space to remain so laissez-faire.
I don't think most regulators are yet in a position where they can actually give you real guidelines to work with. And a company, trying to provide solutions for blockchain technology, they don't really have a textbook to follow. But we do see a lot of work from the relevant regulatory authorities. So no, I don't think that regulators are now really up to speed, but I think we'll get there pretty quickly and they will catch up.
Blockchain.
Honestly, although we've only thus far grazed the surface of these deep and complex issues, this may be where we have to stop. Because the market for decentralized tech is still in its nascent stages, it's difficult to discuss in any material manner, in a way that's based on facts and not philosophy. The next step will just be a waiting game, waiting to see when all this goes down, how it plays out, and last but not least, whether regulators will get it right or wrong.
I have some faith that the regulators will get this right. We largely got the internet right in the United States, right? The regulatory approach towards the internet was largely hands-off, largely very soft-touch regulation. And I think that we're going to need to see some of that happen in this sector as well. It's the old world of regulation was beg for permission. You got to go to the SEC and send them a 200-page S1 and spend 3 months negotiating with, and then you have the right to do a public offering. I think we got to move to the beg for forgiveness model, where you do it, and if you operate legitimately, they let you stay up, and if you're breaking the law, they take you down. That's kind of where we went with copyright back in the 90s with DMCA, and I think that's where we got to go with a lot of this stuff, because to put all of this, you can't do anything until you get my permission, that just takes too long for entrepreneurs. It just doesn't work.
And with that, we conclude our discussion of blockchain regulation and consumer protection. Thanks for listening. I hope you've learned something today. If you have any questions or comments about today's episode, feel free to email me at nate@podil.net and leave us a review on iTunes, would you? The end of our podcast season is fast approaching, but we have more good material coming your way, so make sure to stay tuned. I'm Nate Nelson. I'll see you next time here on the Orbs Podcast.
Blockchain.